Good morning and welcome. My name's Dave Cole. I'm the CEO of First In, a real estate marketing agency since 1992. It's my pleasure to present these opportunities to U.S. investors, brokers, developers, and all things professional. There's challenges with investing in the United States. Yeah, it can be good. So we're not telling you to invest or not to invest in the United States, but there are some other opportunities internationally. And if you've got the resources to do it, it can happen. We're going to talk about that for the next few minutes and show you some examples, starting with the Dominican Republic. And we're going to focus on the area of Punta Cana for the sake of this discussion. So let's begin. All right, it's achieving success with international investing. So, a few facts as we prepare and give it a few minutes for even more people to join us. We welcome you. So, there is a demand for housing and commercial construction in Punta Cana and throughout the Dominican Republic. There are tax advantages and benefits for U.S. investors. There is quality and availability of construction materials at the location. So this becomes a passive investing opportunity for the right people. But the demand is there for housing and commercial construction. Tourism and comprehensive demand. Punta Cana receives over 7 million tourists annually, establishing itself as the most visited destination in the Caribbean. The growth of tourism supports high hotel and residential occupancy throughout the year. The market has sold thousands of units recently, with condo prices ranging from 150,000 US dollars on up to million or more. The growth of the tourist and resident population obviously generates demand for stores, food services, offices, even co-working spaces, private clinics, and logistics. Land ready for large-scale hotel or residential development tends to have higher prices depending upon accessibility and proximity to key amenities. There are rental trends, vacation rentals, the average net return estimated at 7% to 12% annually for well-located and well-managed properties. Vacation rental occupancies typically average 75 to 85% annually. That's annually, with peaks of 90% or more during high season. In Punta Cana and tourism areas, prices per square meter are rarely low, with a reported range. Well, we're not going to give you a range because there's so many different areas in the Dominican Republic, but we can get that to you if you choose to follow up. And the range is higher, of course, for luxury properties. So investing in Punta Cana and or the Dominican Republic. So we've got the international properties. Again, it's passive investing, which is passive income, the strong demand, favorable tax environment. So why look outside the U.S.? Well, current investor reality is part of it. We have rising U.S. asset prices, compressing yields. We have increased competition in traditional markets, and we have investors seeking diversification and yield. So, international, in the case of the Dominican Republic, it looks like we have a higher yield potential. We have dollar-based demand drivers and portfolio diversification. There are potential tax advantages. The information on your screen is one of the tourism incentive laws in the Dominican Republic. There's an exemption from the property transfer tax for approved projects, and that's at 3%. So you look at that, that's $30,000 per million. Excuse me, and on a $10 million project, that becomes a $300,000 tax exemption. Think of what that does or could do for your margins. An exemption from the annual property tax of 1% for up to 15 years. So, in Punta Cana Via, there's a possible exemption from taxes on imported construction materials for approved tourism projects, which significantly reduces operating costs and improves net profitability. Now, there are sufficient construction materials already in the Dominican Republic, so there could be some advantages either way, depending on what the investors all decide to do. Now, there are no ownership restrictions for foreigners in the Dominican, and capital and profits can be repatriated without severe penalties, and that means transferred back to the other countries. Now, tourist areas in and around Punta Cana have clear urban planning for hotel, residential, and commercial developments. These are predefined mixed-use areas focused on high-quality tourism and support services. So it's important to work with a local lawyer or urban planning consultant to ensure compliance with codes and permits before starting construction. So we have and can connect you to resources that can do that. The local people, the attorneys, the contractors. That's part of this if you choose to follow up. Punta Cana represents a strong investment opportunity. Again, solid tax incentives, the strong and resilient vacation rental market, and sustained demand driven by international tourism and population growth. A little bit more about the market. It's, again, the #1 tourism destination in the Caribbean. There's year-round demand. There's an international airport with direct U.S. flights, rapid infrastructure, and commercial growth. So that's the point here. Punta Cana is transitioning from just a vacation destination into a full-scale economic hub. Now, let's look at some of the demand drivers. What sustains the market? As we mentioned, tourism. That's hospitality demand. Also, plenty of short-term rentals. There's a growing resident population, which means long-term rentals and services. Commercial expansion, and that's a big part of this. Plenty of room for retail, for medical offices, for different services. There's a strong international buyer interest, and that's from the US, that's from Canada. We're seeing that from Europe. It reduces seasonality risk compared to pure resort markets, something else that's very important. Investment types to focus on in the Dominican. There are primary opportunities. Income producing residential, that's condos, that's villas, I should say, that's resorts, that's even some single family housing that's made available for this purpose, short-term rentals. There are small to mid-scale developments. Excuse me, there are mixed use or commercial support assets. Now, there are some things to avoid, and that's speculative land without a clear use. Not good for this form of international investing, especially passive. Want to watch for over-leveraged projects, and especially inexperienced developers. Now, this is a passive, or these are passive investment opportunities designed for U.S. investors. So opportunities are structured as passive by default. Local teams are in place, and it's a matter of making the right connection that can handle the development, the construction oversight, and the ongoing property management. all the things you need for a successful passive investment. If everything checks out, you do your homework, the numbers work. U.S.-based investors participate as equity partners, as capital contributors, as limited passive participants. There is no day-to-day involvement required. A true passive investment, when you've got the right team in place, you can get checks. And boy, it'd sure be nice to be able to go down there, visit, stay a few days, and check out your properties now, wouldn't it? All right, construction quality and risk control. Let's address the number one investor concern. The local materials in place are made with reinforced concrete and steel construction. They know the weather conditions and what can happen. There's hurricane appropriate building methods in place, ready. They'll use experienced local developers only. There are independent engineering and inspections available and clear specifications and documentation. Remember that the Dominican Republic is encouraging U.S. and other international investors. That's where a lot of their investment is coming from. So they're going to make it as easy as possible. Not that it's easy, but they're going to make it as clear of a path as possible for you to succeed. Their point is the risk is not the country. It's not the Dominican Republic. It's developer selection and controls. So the Dominican Republic uses reinforced concrete and steel construction almost exclusively. There is no wood framing like there is in the U.S., which is actually more durable for tropical environments and, well, if there is to be a hurricane. Most core materials, and that's cement, that's block, that's steel, that's aluminum, and even glass, are locally produced or regionally sourced, which reduces reliance on overseas shipping, and it reduces the costs for overseas shipping. So that's a double whammy in our favor. Now, the risk arises when developers cut costs on finishes or waterproofing or even electrical or plumbing. Well, that's the same as it is in the United States on that one. There is limited third-party inspection, and construction is not executed to U.S. or international engineering standards. So, sophisticated projects actually mitigate this risk by using experienced, branded, and institutional level developers, by employing independent engineers, inspectors, and project managers, by building to international standards. That's ACI concrete codes, hurricane load requirements, and even seismic considerations. By providing construction, documentation, specs, warranties, and punch list controls. That's how sophisticated projects mitigate the risks. Now, the issue is not can quality construction be achieved in Punta Cana? It clearly can. The question is who is building it and under what controls. So this is why institutional capital typically flows only into repeat developer projects with transparent processes. So this is where the expectations have to be reset when you're looking at the reality of it all. Now, the financing part. Now, this is where the expectations, we need to really look into that. So, all right, most U.S. banks and private lenders, if not all, will not fund foreign real estate, especially if it's ground up construction, markets without U.S. style title insurance, and jurisdictions they cannot easily enforce or foreclose in if they need to. But private funds and investors are doing it. it can be done in the Dominican Republic and in Punta Cana. There's cash-heavy or equity-driven structures. Projects are funded with investor equity, developer capital, and even pre-sales, which actually are quite common from what we've been able to find out in the Dominican Republic. But see, there is local Dominican bank financing available. It's typically 60 to 80% loan to value. It may be higher interest rates than the US, but there's a strong emphasis on pre-sales and the developer track record. There are opportunities for developer financing on the buyer side. In fact, we're hearing it's common in the Dominican for end investors. It could be 20% to 50% down. There are payment plans during construction. Sometimes there's short-term post-delivery financing, and this model actually bypasses U.S. lender restrictions entirely. Now, they're not looking to bypass U.S. restrictions. That's what they're able to do to get the job done. So there's no major quality construction issues in the Dominican regarding the quality of materials and when using the correct developers to execute. And local financing is almost, well, you can't guarantee it, but there's a pretty good chance for developers or final buyers, especially when you have a property to back up your loan. So local financing in the Dominican requires the collateral to be located in the Dominican. The banks generally do not accept U.S.-based property as collateral for loans issued locally, but this does not prevent U.S. investors from participating. It simply defines how financing is structured. So the deals are equity-driven, light local leverage, and again, local financing secured by Dominican assets only. That leads to lower leverage, more conservative structures, as we were saying. Now, returns and exit strategy, as is on your screen. There's cash flow from rentals. There's appreciation over the hold period. There's optional refinance or sale exit. Returns, as we said, vary by structure, but the focus is capital preservation, predictable income. Remember those statistics we gave you earlier about 7 million tourists going to the Dominican each year, and now people are staying there. It's growing as a residence, people working in these businesses, making tourism the big part, but there is a thriving downtown and a business area now. And this creates clear exit paths. So how we work together for mutual benefit. On the U.S. side, there's investor relationships, there's presentations, there's capital introductions. On the Dominican side, there's deal sourcing, due diligence, local execution, and closing. So there's land pricing, typically in developing or expansion zones. There's plenty of property that refers to raw land prime for development that's not beachfront. There is road access, but limited infrastructure compared to prime areas. It is not the price for finished or residential commercial space. There is a high season for vacation rentals, so this is relevant for timing investor presentations. A little bit more on that. The high season is considered December to May. That's peak time, but January, February, March, first quarter is the strongest. That's the highest occupancy and nightly rates. Now, July and August has been on the increase, driven by summer travel and families visiting. The medium season, May to July, September to November. It's lower rates, but there is a consistent occupancy. During the high season, it is easier to demonstrate occupancy levels, cash flow strength, and real-world performance and not projections. So, Does a U.S. buyer need a U.S. broker? Not required to have one, but many U.S. buyers purchase directly through a Dominican broker or developer. Now, if the buyer does have a U.S. broker, and we can definitely connect you with experts on that. So if you do, we're not saying to not have a broker. It can go either way. You're not required to have one, but many U.S. buyers purchase directly, but there's two workable options. There's a co-brokerage or referral agreement where the U.S. broker acts as a referral partner, so you would have him, her, or them on your side. Referral fee is paid from the Dominican side, in terms of the commission and all that. So, and there is a commission system through the Dominican either way. So those are things to keep in mind. Now, these opportunities, all right, they're not ideal if you're looking for high leverage strategies, short term speculation, or hands on operators wanting to control it from another country. Frankly, not going to work. This is for savvy investors, for equity, partners, placements. Why look outside of the U.S.? Rising U.S. asset prices, compressing yields, increased competition in traditional markets. You're seeing that. You see, oh, hey, there's opportunities here, and there's 50 other people ready to outbid you. Investors are seeking diversification and yield, but international, higher yield potential, dollar-based demand drivers, portfolio diversification. All right, how do we start? All right, in my role, I'm a connector. I'm not a licensed broker. I'm not here to sell any specific properties. We're working with teams both here in the States and in the Dominican to help savvy investors that see the potential here, help them get connected and get these projects done. So we can provide one-on-one follow-ups, review specific sample opportunities for consideration, discuss the structure and fit that works for you. Now, we'll explore your situation. As we mentioned, we can connect you with participating brokers, the appropriate people in either or both places. So I'm happy to put you in touch. Again, I'm not a broker, just kind of acting as the intermediary. We have people from both sides, the U.S. and the Dominican, that are anxious to be able to talk with more potential investors, see what we can do while these opportunities exist. So if you do want to follow up, please do contact me. My contact information is right there on your screen, as they say, and I will get you matched up. And, we're all taken care of, no further obligation. Now, I can see by the chat that we've got a bunch of questions. I appreciate your letting me go through this so we can get all the information out. I see some of you realize your questions were already answered, but I know there are some. So, yes, let's begin with the questions, and certainly appreciate everybody attending for us this morning. More of these to come. All right, I'm going to go with the first question here from Tom in St. Louis.